Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Tata Consumer, which is a top portfolio play coming at a very good levels. So let's understand about the business and let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Tata Consumer, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It helps you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up on short-term, long-term market calls. And if you can pay $100 upfront, you get 1 year access by paying for 10 months, so that's a 16% discount. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, kindly take monthly membership on YouTube. You can take that with Google Pay or other modes of payment. And all benefits of Patreon will be provided to YouTube members as well. Now about the company, Tata Consumer was established in 1964 and they provide coffee beans for major clients, and this was the major business earlier. Have acres of mainland tea coffee estates and tied with Starbucks in 2017 and started its production for Starbucks by 2018 or so. And now it has become a FMCG brand, so many FMCG products from spices to other kinds of fast moving consumer goods are being produced by Tata Consumer, and one of the few beverage companies that is listed and directly related to, probably the only company that is directly related to the Starbucks play. If you look at the financials, so these are the Q2 numbers for FY22. So sales went up by around 6%, profit went up by only 4%. So there was pressure on the profit because of the high coffee beans prices, and there was also pressure because of the other raw material prices that has risen. So a lot of things have happened due to which expenses have risen a lot. It's a debt-free company, low promoter but decent institutional holding, quite a decent FII DII holding in here, and probably this is the reason why the stock has struggled from the highs and has probably nosedived towards 700 or so. Return on equity of around 7%, operating profit margin of 15% is decent in a very competitive environment. If you look at the performance, it has surged 50% in 2021, so it has given a return of 50%, but it has declined around 25%, not even 20%. This was 20% when I made the presentation, but today as I see it, it is more than 25% down from the highs. And becoming a consumer brand, this looks a very good company from or a investment from a 5-7 year time frame. Cost pressures have hurt the numbers. We have seen cost pressures because of many raw material prices like oil and crude, and then also coffee prices, etc. And also transportation and all these logistic cost has also risen, especially when you are trying to transfer products globally. There have been a lot of restrictions, and then restrictions have been taken off, and now with the third wave, etc. So there have been a lot of pressure, but you have to understand that once things get going, top investors keep on buying these companies. It is a nifty stock. It is a large cap. It has become a large cap stock, and it has done extremely well over the last, you can say, 10-11 years. It has done extremely well, so have come to attractive levels. At these levels, I think 700, 720 are very good levels to probably get into the stock. So in my opinion, it can give 18 to 22% return. It can double in 4 years. This is the kind of a stock that we are looking at. A big consumer stock. Backward and forward integration is possible here because coffee beans as raw materials is sourced from its own, you can say, coffee estates, and then it is forwardly integrated with a lot of logistic, you can say, stuff that is linked and carried forward by Tata itself. So the only Starbucks play that is there, and they are supplying to Starbucks. Strong operational growth once things normalize. So right now, it's not looking that the numbers operationally or on other ROE front or other return ratios front are that good. But once things normalize, probably in a year's time or so, 2 3 quarters, you will see numbers really pick up and it will continue to make new highs. Expansion with more centers will lead to further attraction in numbers, and I think just being in Mumbai or Maharashtra with the Starbucks thing, I think the Starbucks will open up across India in times to come as things normalize. Plus, there's a chance to expand the business all over India once things really get going on the ground. So everything has been stalled for the moment. So over the next 5 6 years, there are a lot of plans from the company in terms of expansion with respect to the business. So it has corrected recently. So valuations manageable, yes, slightly expensive, but if you look at a consumer stock point of view, I think around 700 710 it is at a very very good level. So from the next 6 to 10 years perspective, one can definitely accumulate here until declines to 670 680 and have patience with the stock. These are very good levels to get into. So buy on major declines and at current levels. You can buy 30 40% of your total holding at these levels. If you're holding on to it, keep on holding. If you have some money, average it, average the stock here around 700. I think 680 700 very good levels to accumulate the stock. A very good long term play. Have 10% of your total holding into such stocks. So this was my video on Tata Consumer. Please like and subscribe my channel. Hit the bell icon so you can get my video straight away when I post it. Thanks a lot for watching.